Welcome to my channel Notes Explained, and here is a presentation of the first chapter of Economics, Money and Banking, Part 1 for Class 10, Seba board. All the important points has been jotted down in this video to help you learn easily and you don't feel that the subject is hard. So, do like, comment, share, and also remember to subscribe and also press the bell icon below so that you get the updates regularly. The beginning of the chapter starts with a question. What is a barter system? So here let's see the answer. Barter system is the direct exchange of commodities against commodities. All the individuals are interdependent on each other and this leads to barter system. So always remember that long time back there were no money. There was only a system practiced by everyone, that is barter system. And in this system goods or commodities were exchanged against each other. For example, if I have a red pen and you have a blue pen, we can exchange with each other and do our work. But nowadays we just go to a shop, give the shopkeeper money and buy whatever we want to buy. So long time back barter system was practiced and this system is said to be interdependent. It is interdependent because without a blue pen I will not be able to do my work and you cannot do your work without a red pen. So both of us are interdependent and thus we exchange the things with each other. But there were many disadvantages of barter. When population began to rise up, leading to growth of big markets, there arose many disadvantages of the system. It is very simple to hear that people exchange goods. When they did not have one thing, they exchanged with the other. But there are many side effects behind the system. Disadvantage number 1, lack of double coincidence of ones. For example, A sells rice, B sells sugarcane and C sells fish. But if B needs fish from A will not be able to give because A does not sell or produce fish. Again, if B needs fish from C can give, but C does not need sugarcane. So this is the problem that occurs between the three sellers. And if B would have used money and not practiced barter system, then B would have directly used money and buy fish directly from C. So this is the first disadvantage of barter system. Disadvantage number 2 is lacks common unit of account. For example, 1 apple is equal to 3 guavas or 1 cow is equal to 2 or 3 goats. So it is quite difficult to remember that 1 apple is equal to 3 guavas. That means you can get 1 apple if you give the other person 3 guavas, and if you give the other person 2 or 3 goats, then you will be getting 1 cow. So this type of exchange is impossible for the consumer to keep in mind the innumerable rates of exchanges. These two things we can remember easily. But in this world there are not only these two things, but there are number of things. How are we going to remember all those things? So whenever one has to go to the market, one needs a big diary where all the exchanges will be written, and this is impossible. So again the system failed. Whereas if money should have been used in that way, it would have removed this problem because value of each commodity is expressed in terms of money. The cost of 1 apple will be, for example, rupees 10. The cost of 1 cow may be, for example, 20,000 or 30,000. For example, I don't know what's the rate of cows, so it is just an example. The next is commodities are indivisible. So all commodities cannot be exchanged in this way by dividing and giving. Many things can be divided and many things not. Like for example, rice in exchange of sugar can be easily divided and exchanged. But there are certain things like piece of bread and elephants. They are impossible because a thing of low value cannot be exchanged with another thing of high value. The thing of high value cannot be cut down into pieces and given to the person with a low value. So that's why commodities are indivisible, and that's why the people fail again. They cannot exchange their goods once again. Whereas if money had been used, money is divisible, since once the value of bread, for example rupees 20, is obtained from rupees 500, the shopkeeper returns the remaining amount, that is rupees 480. So that's why money is an advantage, where the amount of bread will be kept by the shopkeeper, for example rupees 20, from rupees 500, and he would return back rupees 480. Point number 4. It lacks a store of value of goods and services. Some commodities, when stored for future use, may perish away or get rotten. For example, eggs, fish, milk, etc. Some perish soon, while others later, like clothes, rice, etc. So, since we know that long time back barter system was practiced, so people they tried to store the goods. It can be eggs, fish, milk, or even animals, so that they can use in future. But certain things may perish away, or they may get rotten. In the case of animals, they may become sick or unhealthy and die someday or the other. But again, there are some things that may remain, like clothes, rice, sugar, etc. But in the case of money, money is durable, since it cannot perish away. It can be stored in banks for future use. So now we know why barter system failed and later money came to be used. So barter system, first of all, the disadvantage was lack of double coincidence of funds, lack of common unit of account, commodities were indivisible, and the last, lacks a store of value of goods and services. Evolution of money. There are 5 stages in the evolution of money. So we now know that paper money was not used just after barter system. It has a long history, and it is said there are 5 stages in the evolution of money. So number 1, we all know that it is barter system. It was the first stage of evolution. Commodities act as a medium of exchange, so it is also called commodity money, and it failed due to many disadvantages. We are all clear with point number 1. Number 2, animal standard. It is the second stage of evolution. Here, the animals were used as medium of exchange, especially goats. So in the barter system, it is also called as commodity money because commodities were exchanged, and here in animal standard, animals were exchanged and goats were specially used here. But again, it has 3 disadvantages. Number 1, animals were not homogeneous. Homogeneous means they were not same. Some were healthy, some were sickly, some were white, black, and so on. So while exchanging, maybe people prefer the healthy ones or the white ones. So again, the animals were not homogeneous. Point number B, reduction in the supply of goats during epidemics, because epidemic is a type of disease that the goats suffer. So at that time, the goat supply reduces or it decreases, because many animals or many goats at that time they die. And when the goats die, it leads to the shortage of money. And again, it increases in the supply during breeding season. Now we all know breeding season, that means when the goats breed, when the goats give birth to other goats. And the last point would be indivisibility, since animals cannot be divided and used as a medium of exchange. So this system we have also learned earlier in barter system, animals cannot be divided. Metallic standard. Gold and silver were used as medium of exchange. So if gold and silver were used, why were they termed as metallic? It is very clear, because they are made of metals. Again, this system had two disadvantages. Number one, proper verification or judgment had to be made to see if it was real gold or silver or fake one. It is not possible for everyone or for even the weak people to recognize gold or silver. So that's why, since it is not possible, they may even accept the fake one because they cannot recognize. So that's why it again failed. Point number B. It was not safe to carry gold or silver every time and wherever they want due to security risk. Yes, it is very risky to carry gold and silver every time along with the people wherever they traveled to. For example, nowadays we keep in banks or we keep safely at homes. But just imagine, instead of carrying money, they carried gold and silver every time and whenever they went outside to buy things. So this becomes a very risky task. So the fourth stage is coinage. Gold and silver coins were minted out of gold and silver bars. So point number 3 was metallic standard, where metals were used. Since metals failed, now coins were made out of gold and silver and they began to be used. Again, this system had many problems. Inelastic supply of metals, which means decrease in the supply of gold and silver, leads to decrease in the supply of coins. So since gold and silver were made from metals, and if metals did not have a proper supply, or if there was less supply of metals, then again there would be problem and there would be decrease in the supply of money. Number B, it became inconvenient to carry large amounts of coins from one place to another. Again, it's the same thing. It is very difficult to carry the heavy coins along with them, and that also not just coins, they were gold coins and silver coins. It was very difficult and again very risky to carry from one place to another. Number 5, paper money. It is the fifth stage of evolution and it evolved out of two stages. Number 1, convertible or representative, and number 2, inconvertible or non-representative. Number 1, convertible or representative money. Paper money was convertible into gold or silver of equivalent value. So in the fourth stage we have learned about the coinage, where gold coins or silver coins were used. For example, the value of one gold coin is equal to rupees 20,000 or 30,000. So instead of using one gold coin, they directly convert it into, for example, 30,000 in one paper. That means gold was directly converted into paper money. Or we can also say gold and silver were directly converted into rupees 10,000 or 20,000. This is convertible or representative money. But in the second stage, that is inconvertible or non-representative money, paper money is not directly converted into gold or silver, since money is further broken down into smaller amounts. For example, rupees 1000, rupees 500, rupees 100, etc. So these days we can convert money into gold only if the amount is equal to gold. For example, if one bar of gold is equal to 80,000, then we need to collect a sum of 80,000, then only it will be equitable to gold or silver. So since money was further divided into many small pieces like 1000, 500, 100, so that's why gold and silver were not directly convertible, because of the small amounts of money. So to make it more clear, we can also say convertible money means there will be only one gold coin, and on the other hand there will be only one paper money. It can be 30,000 or 50,000. On the other hand, in convertible or non-representative, on the left side you will have only one gold coin or one gold bar, but on the other hand there will be bundles and bundles of money because it is not directly convertible. We have to make it a sum of much money that would be equatable to gold, then only it will be convertible, or else it will not be convertible with only one paper money. So now let's learn the fifth stage of the evolution of money. According to Geoffrey Crowther, anything that is generally acceptable as a medium of exchange is money. So the thing with which we can exchange things, that is called money. Now it has many characteristics. Before learning the characteristics, since there are many points, just remember the 5 points, the shortcut, so that it will be easy for you to remember. ACDHL. Remember that DHL is a German company. DHL is a German company, and since it's a company, so AC would obviously be there. So ACDHL. Remember the first 5 points. Number 1, acceptability. Money is acceptable by everyone. This point is clear. Number 2, cognizability. No difficulty should be there in identifying or recognizing money. Everyone should be able to recognize money. Number 3, durability. Money cannot perish away or rotten. It can be stored for a long time. Number 4, homogeneity. That means equality. All the paper notes should be of the same equality or equally made. For example, if 1 rupees 10 is like a ribbon and the other like a register book, everyone will prefer the bigger one. So all rupees 10 should be equal, all rupees 1000 should be equal. Number 5 is liquidity. Money can be used to buy anything, which can be goods or services. Goods in the sense we can buy goods using money. Again, services, if I want someone to do some work for me, I have to pay him or her money. Again, for example, if I have a plot of land, with that plot of land I cannot buy goods and services because we do not follow barter system anymore. That plot of land has to be converted, has to be sold, then only money can be obtained, and then only goods and services can be bought. The last 3 points is TDS. Number 1, transferability. Trade and commerce is expanding day by day, so it is not necessary to physically transfer money to settle transactions. So money can be easily transferred these days through credit and debit cards, core banking facilities, or online payments. So these days we can easily transfer money from one account to the other, or we can easily transfer money from our account to our pockets without going to the banks through ATMs. We can also do online payments through our mobile phones. That means we are transferring the money in our account through the mobile to the place where we want the payment to be done. Number 7, divisibility. Money is divisible from high value to low value. We have learned many stages in the evolution of money where divisibility was not possible. Barter system, in the animal standard, these were not possible. But in the last stage, money is easily divisible because a huge amount or a high value can be easily divisible into lower values. The last characteristics of money is stability of value. Value has to be stable, or else if the value falls, then money will fail to act as a store of value. So remember, the value has to remain the same or stable. Otherwise, there will be ups and downs, and again this system or this evolution will fail like the all other 4 stages. I can understand that you have a hectic schedule, and on the other hand you have to remember so many things. So use the easy tricks given here. It will make your learning easy. Number 1, ACDHL. DHL is a German company, and since it's a very big company, AC is obviously needed. A for acceptability, cognizability, durability, homogeneity and liquidity, and TDS. Since DHL is a very big company, it always finds source to reduce the taxes. So it can be TDS, tax deduction source. Transferability, divisibility, and stability of value. If you like the easy tricks and the notes given by me, then comment below, and the rest would be continued in the next video. So do watch the video to clear your doubts. Till then, stay safe and healthy.